Hey everybody, welcome in. Happy Sunday. Today we're sponsored by Pink Floyd, Dark Side of the Moon, and Black Coffee. Only kidding, this channel doesn't have any sponsors, but I just want to share that because there's a number of little things that we can pull from this. And I don't want to get overly philosophical. It is a crazy time right now out there in the markets. We are in a recession. Things are kind of difficult for everybody out there. But again, about today's sponsor, Dark Side of the Moon, it's an album that discusses philosophical and physical ideas that can actually lead to a person's insanity. And I know people are hurting out there, and that can lead to a very unfulfilled life. But this is a story today about prism and perspective. There's actually two songs in this album. One is called Time and one is called Money. We'll talk about those two, and everything will be intertwined. So again, big thanks to our not sponsors, and a big thank you to everybody in the audience. Let's go. We got 45 nuggets of information to get through in about 30 minutes. That's 40 seconds a pop or so. So let's go. First of all, this is edutainment, always edutainment, never financial advice. I share what I do. I share what I see, so you guys can become better investors. So first of all, key quote, and this is kind of poignant and important as well. It's from, I won't mention his name because in some people's eyes he's very unpopular, but this guy is also one of the best investors of our lifetime. Now, the worse the situation becomes, the less it takes to turn it around and the bigger the upside. So basically, I think in simple terms, you make the most money when things go from truly awful to merely bad. And I recall myself in March 2020, little lesson here. I was studying COVID intently since December 2019. I was in all cash. I was in touch with folks on the ground in Wuhan. A good friend of mine's sister lived there. And I was just waiting for that moment, waiting for that bottom. And anyway, this is not financial advice, just a lesson from a top investor that I've watched for a very long time. Yes, we are in a recession. Yes, things are ugly, but this is where people like him make most money. So that's kind of to tee it all off. First question is from Trey Caldwell. And this is an excellent question, a little cliche, but we're going to go with it anyway. How is it possible for price to remain where it is when the number of 10K Bitcoin wallets is exploding? Wow. Great question. Great observation. Let's jump in and let's see exactly what he's talking about. So here I took this Glassnode chart, and this is the number of wallets with a balance of more than 10,000 Bitcoin. On the left, you can see I put in an orange arrow and a gray arrow so you can see the visual of what I see, but pointing it out more clearly. Number one, the orange arrow is the holdings of these 10K plus wallets. As the price of Bitcoin goes up, which is the gray arrow, the 10K plus wallet holders empty their bags all the way down. It is absolutely perfectly inversely correlated. Now, the corollary is also true. When Bitcoin is really cheap, i.e. when the price goes down, which is the gray arrow on the right, the orange arrow goes up. So, okay, 10K holders are buying Bitcoin because it's bloody cheap. But who's selling? This is the question. So, again, per Glassnode, they have an accumulation trend score by wallet cohort. So it's a bit of an eye chart, but I'll try to help you zoom in. I put in a red arrow to highlight the area where they are kind of lightening their load a little bit. This is the 100 Bitcoin up to 10,000 wallets. And you can see the color there is a little bit pinky, a little bit red. These are the groups that are lightening their load ever so slightly. It's not deep red or anything like that. Now, the entities with less than 100 Bitcoins, people in the audience, me, I was struggling to help people get to be whole coiners all of last year as a mission. And I know for a fact there are thousands of them now. And this is a nest egg. This is a zoom out time. Having one whole coin 5 years from now, 8 years from now, 10 years from now will be very special. But you can see here, the entities with that 10 to 10,000 are lightening the load. And then above that, you got the 10,000 plus all blue accumulating. Okay, so now we know who is lightening. But the real question is, who within that cohort is actually lightening their load? This is the answer. Miners are trying to pay for the mining machines they have to pay for the mining machines they ordered 6, 8, 9 months ago. They put down non-refundable deposits in millions of dollars. And there's a huge wave of miners that came in during the bull cycle, and they bet big on Bitcoin prices that they would rise. And they also invested very heavily on ordering mining equipment so they could mint more during this market. Now, the problem is they're not able to hodl anymore because their bills have come through. So this is where we are now. The worst of the selling actually happened around the first and second week of May 2022. We saw way worse selling in January 2021, just for perspective. And this is what happens. It's a seasonal thing. But to be honest, with everything that happened in May, we were in the middle of another, I don't know if it's a word, but crypto apocalypse right now with STETH. I'm sure a question will come in for that later. We'll talk about that too. But there's a lot of anxiety around staked Ethereum and all the other stuff that you see out there. So we don't need to go. But we did have a capitulation event of the 80,000 Bitcoin hitting the market because of the remain nameless implosion. And combined with that, we had miners selling. So we had a double whammy. And we are faced now with the potential of a third whammy. So the point is, as our friend at the very beginning said, wait till things are the darkest before getting in. And, anyway, that is the answer. Trey, I hope that worked for you. Great question, by the way. Let's jump ahead and go to the next question. First of all, this is from Crypto Blaster. What would need to happen for Bitcoin to be completely uncorrelated to all other assets? Interesting one. So first of all, we got to look at the macro backdrop. We are in a very, very difficult situation. First of all, the macro backdrop, I don't even need to talk about all the crap that's going on. We'll talk about that a little bit later. But when Bitcoin began, it was completely uncorrelated with traditional markets. And early attribute of Bitcoin historically has been its uncorrelation. Therefore, it fits perfectly in a portfolio. The closest thing was correlated to way back when was actually real estate. And the historical correlation of Bitcoin to the S&P 500 is 0.15. But the problem is, because of today's macro world, again, I don't need to say what's happening, but interest rate hikes, Ukraine, Fed hawkishness, uncertainty, supply chain problems, crazy inflation, quantitative tightening, boom, hit with everything at the same time, which smashes everything down beyond true value. So everything gets really oversold. That's exactly why I mentioned that quote at the very beginning. Write it down, watch it. Very wise quote. Let's look at the visual of what this actually looks like. So if you look at just the last 5 years, again, if we go back to the history of Bitcoin, going back 12 years, the average correlation is 0.15. And I drew in the red line there. The blue is the correlation to the markets. And you can see even as recently as July 2021, no correlation. In fact, inversely correlated. Same thing back in December 2019, early 2020, and also going way back to August, September 2018. So we do have those periods where there was absolutely no correlation. The question is, what will happen? I think a lot of people are calling for this real issue here. And the answer is, when will we go back to normal? And the answer is, people say, when we go risk on again. We're not sure when that's going to be. Is it going to be the middle of August? Now with the very bad inflation print we had this week, tanked the markets on Friday. It could take longer. It could go September. But either way, it's pretty clear if they jack rates heavily, they shoot themselves in the foot, they crush GDP growth, and they cause a debt spiral to happen, like we're seeing out there. So we'll see. But many people do predict once we go risk on, the first thing to rebound will be Bitcoin. So we'll watch that space carefully. Next thing, cream of the crop. With more institutions buying Bitcoin, what's the potential we'll see an increasing amount of market manipulation that will keep price permanently suppressed? Brilliant question. A lot of very deep ideas today that are on your mind. So first of all, I wouldn't worry about institutions trying to permanently suppress the price of Bitcoin. That goes against what their end game is, i.e. alpha. Now, there is manipulation in other markets like gold, etc., but Bitcoin's a little bit different. First of all, institutions are buying Bitcoin, but so why would they want the price of Bitcoin to be permanently suppressed? If anything, more institutional buyers should lead to higher prices. Secondly, To suppress the price of Bitcoin, institutions would have to create more bearishness than there actually is. And perhaps they do this by creating a large amount of sell orders to create the illusion that there is more selling than there actually is. Maybe this works in the short term, but this cannot be sustained. They can liquidate a bunch of leveraged traders and buy Bitcoin at a better price, but in the long term, completely unsustainable. Say, for example, an institution dumps billions of dollars on the market to make the market go down. As soon as the institution tries to buy back billions of dollars, it will drive the market price back up. And now we have an army of snipers that know this game, and they know when to snipe and know when to grab cheap Bitcoin. And further, the institution is manipulating and the market moves against you. So you can end up selling the Bitcoin you don't actually want to sell and not being able to buy it back at the price you want. So the more manipulation, the more exposure you have to yourself. And in a raging bull market, even if institutions wanted to, they wouldn't be able to suppress Bitcoin price. And that's a simple answer to that, but very good thought. That is just our take right now. So next question is from Not a Physicist. At what point do we stop looking at crypto dollar pairs and only look at Bitcoin pairs for true long-term value? Brilliant question. So let's pull up a couple of different things. One of the reasons why we're in such a world of hurt right now, I calculated in early 2021 that we'd have 15% inflation based on the explosion in M2 money supply, which happened in March 2020. That you can see right here, the big vertical spike. The growth over the past 22 years of money supply is 7.33x. That is insane. Nearly 7.5 times increase in just over 20 years of money. Therefore, money has become less scarce. And what's the hardest asset in the world? It's Bitcoin. So let's look at, this is a cool thing that was up on the Fred website. This is the price of eggs in US dollars. Now, what's startling about this chart, it looks like it's over like 10 or 15 years, but it's not. It's since January 2021. The price of 12 eggs, average eggs, they're not organic, they're not free range, they're the cheapest eggs you can buy, went from $1.40 to $2.50 in that tiny window of time. But they put together another perspective, which is hilarious. This is the price of eggs in Satoshis. And as you can see by zooming out, again, one of the themes of today, perspective, the price of eggs as measured in sats fell by 99.3% since January 2015. I think when the Fed started tracking Bitcoin data, I'm not sure, correct me on this, I think they took this chart down because it made the money printing look really bad. But basically, the price tanked. And today, the same amount of eggs would cost about 7,000 Satoshis. And remember, back in 2015, it would have cost about 1.3 million Satoshis. So you're dead right. We need to start thinking in terms of a hard asset that is immutable, that doesn't just increase 7.3 times over the last 20 years. And that is the message. So yes, but it's very hard for people to, you've been ingrained in thinking a certain way for 50 years or 40 years or 30 years, and to flip around and divide by a certain number, like 7,000 Satoshis for 12 eggs. That's complicated, but maybe we'll create, good idea would be a Big Mac index, which is one of my favorite inflation and cost of living indicators in the world. Convert that into Satoshis. That'd be fun. Anyway, great question. Another little perspective on this though as well, just to drill in. This is to visualize the increase in purchasing power. Another way, not eggs, but cash. Here's what it would look like if an individual were to put $100 per paycheck, which is every 2 weeks, so it's $200 a month, since the beginning of 2015 in Bitcoin. You would have invested $17,000 and you'd have $500,000 today. So even at today's depressed prices. So we'll see. At the all-time high, it'd be way more than $1 million. So since 2015, 17,000 becomes way more than $1 million, and that's 2,600% ROI. So again, yes, measuring stuff in something that's debasing so fast is dangerous. So next question is from Tinker Sailor Soldier Coin. What's your uncensored opinion on Crypto Banter's view that a spot GBTC ETF will result in a massive 200,000 coin dump in the Bitcoin market? So this is a very interesting question. Came in yesterday, addressed it, but I thought it needed to be shared because there is some concern about the whole GBTC stuff. So I decided to put together a little back of the napkin set of numbers to give some perspective. We all know what happened to the Bitcoin price when 80,000 Bitcoin hit. If 200,000 Bitcoin hit, that's 2.5 times. That could be a bit of a dumpster fire, and that could suppress the price of Bitcoin way below 25,000. That's the big message takeaway. So what I did was I put together some perspective as to exactly what GBTC is all about and the impact of a GBTC dump post-spot ETF and how easily the market could absorb it. So in this table, you've got the unique number of GBTC investors, 700,000 individuals, holders, okay? Then you've got the Bitcoin held, 654,885 Bitcoin. The RAN expected sales, 200,000 Bitcoin. The sale percentage would be 30.54% of all the Bitcoin would be dumped instantaneously. That's kind of unlikely. And I put in two other scenarios. So instead of 30%, I put in 20%, which would be 130,000 Bitcoin, and 10% would be 65,000 Bitcoin. So imagine we take a median point between 10 and 20%. That would be, call it 100,000 Bitcoin hitting the market. Now, what I also did was I pulled in some data from Canada. The GDP of Canada is 1.6 trillion. GDP of the USA is 21 trillion. And I use this as a way to compare the countries and how much they would invest if they had access to a Bitcoin ETF. So the multiple is 13.125 times. So I hope I'm not losing anybody here. But the amount held today in Canadian Bitcoin ETFs across the three of them is 74,000 Bitcoin. If you take that same 13x multiplier to compare Canada to the US, there is demand for 971,000 Bitcoin worth. Okay, now the money flow required to counterbalance that is $8 billion to buy the extra Bitcoin to take it up to 971. I believe that 8 billion is there, and that 8 billion, if you just take Fidelity asset under management, 8 trillion, that is 0.1% of the assets that Fidelity own. And Fidelity is only one firm. Okay, so it's not a lot of money, especially not at these prices. That's why I think this Bitcoin ETF could be approved, because the prices are so low that Gary Gensler, even if he does approve it, it won't look bad because the downside is so limited. Approving a Bitcoin ETF at an all-time high, dangerous business. Approving it at a historic low, much safer. Politically, could be wrong, just the way I think. Now, the other thing as well, this is the Fidelity asset under management, 8 trillion, and Bitcoin. And just to reiterate, here you can say the financial service company Fidelity Investments said it was giving companies the ability to offer employees the option to vest up to 20% of their 401ks in Bitcoin. That means people who want to add Bitcoin to their 401k would first have to see if their employee offers it. Of course, good employers will give them this option. Up to 20% is substantial. Remember, we're looking for 0.1% of just what Fidelity have to offer. And Fidelity is only one firm. I'm not talking about all the other asset management, investment, kind of retirement firms. So, boom. And that doesn't even take into account people outside of the US that would buy the Bitcoin spot ETF in the US. So, I am not concerned. I think we've got bigger things to worry about than this. And I don't see more than 30% of the Bitcoin being dumped on the market instantaneously after spot ETF is approved. My theory could be wrong, just numbers. So next question. This is from Cebu Kandu. What to do with LINK and MATIC? Is it worth holding them or switch to faster horses like whatever? I'm not going to mention. So let's first of all, LINK versus Bitcoin performance since January 2021. Here, I'm going back in time a lot to give perspective as to how things have performed. In this chart, the orange line is Bitcoin. The blue line is Chainlink. And Chainlink normally is supposed to do very well in bear markets. This is not the case this time around. That's why I often say this time it's a little bit different. So Bitcoin is up, again, 52%. Chainlink down 42%. And that's a big delta over the last year and a half. But let's look at another chart. This is MATIC versus Bitcoin. Different kettle of fish altogether. MATIC has been holding up better. MATIC is up 2,900% in the same time frame. Bitcoin is up 49%. Let's go one more. Let's compare LINK to Ethereum. Here, since January 2021, LINK ETH ratio has bled down 79% since January. So it's just it's just not looking good. It did have that little bump back in early 2022, and that was the only spike of its kind in its history. So there is a little bit of good news regarding Chainlink, not hammering it entirely, but per sentiment, here you can see Chainlink whales. After Chainlink did pump 10% of the past few hours last week, it had a huge move in a very short window of time. This is because the whales are capitalizing, and they did begin dumping on March 30th, but they began accumulating again after prices dropped in early May, and they hold 25% of the supply for the first time since November 2021. So that is positive for Chainlink. So it shows you how low the price is when the whales are coming in and buying at that level. Now let's quick summary is LINK versus MATIC. They're very different beasts. LINK underpins DeFi, but underperforms badly. LINK issue remains that the top 1% own 95% of the tokens. That is not a fair dispersion of tokens by no stretch. MATIC has a strong SCP score and compendium score, but bleeds against Ethereum. I think the problem with MATIC, if I had to hold one or the other, not financial advice, I'd go with MATIC. But I do believe when Ethereum rebounds, MATIC should follow. But the MATIC will always be under the shadow of Ethereum. And a lot of people are concerned that the proof of stake merge will cast doubt on the future or the necessity of MATIC. But trust me, ZK rollups, all the stuff they do, all the scaling, even when Ethereum goes to proof of stake, the TPS will go from 15 to 20. That is nothing. That is nowhere near enough to actually handle the type of requirements. So layer 2s will still be required, very much so. I think of these, MATIC is the better bet. We'll watch them carefully. But they also are very volatile, so swing trade them as you can. Next question is from Dr. Sophie. Most of us are 50% down. Can you show us 3 options we can take to fix this that could work? So this is, again, I'm going to start with kind of perspective and research and give people hopefully a little bit of hope. Now, what I do here on this channel, I share what I see and I share what I do and how I do it. Very open, very transparent. I always share my holdings and my trades. Now, the market is brutal, as I mentioned before, macro war, supply chain issues, C19, inflation, Fed hikes, quantitative tightening. It's a perfect storm of hell, all hitting at the same time. And this is a very unusual macro environment to hit at the same time. Now, I've always, as you know as well, very few names, high conviction. Right now, my portfolio is 84 of my crypto. It's 84% Bitcoin, and it's 81% Tesla in my equities. I always have the whole thing in thirds: real estate, equities, crypto. So that's where I am right now. But let's look at perspective as what's happened. Let's zoom out and let's talk about why timing is everything. Again, the reason I'm wearing this t-shirt: time in the market is better than time in the market for some. So this is the time to really have high conviction bets. What are the companies? What are the assets that are going to change radically and have huge asymmetric upside over the next 8 years? That's what we're looking for. We're playing the long game here. So zooming out, let's talk about my main holdings since January 2000. You can see here, Tesla is up 786%, Ethereum 1,042%, Google 65%, Amazon 22%, it really sucks, MicroStrategy 40%, and Bitcoin 283%. That is just, so you can see the top 3 were Tesla, Ethereum, and Bitcoin. Top 3 gainers in that epoch since January 2020. Let's fast forward to January 2021. Here you can see Tesla 8.8%. It's been flat pretty much for the last year and a half, just up 10%. Ethereum 141%. Google 29%. Amazon down 31%. MicroStrategy down 38%. And Bitcoin up 19%. So here, since 2001, ETH was my best gainer, followed by Google and Bitcoin. See the way things change over different periods of time? This is why you don't know when something's going to pop, but you want to be in early and wait for that pop. So let's talk about this. And trust me, there's a conclusion at the end of this. Bear with me. Over the last 12 months, this is going back to June 2021. Tesla and Solana were my 2 best bets. And I know Solana went from $8 to $20 all the way up to $250. Now it's back at $34. Yes, it is a volatile beast. Look at that red line. That is Solana. But I threw that in their perspective because the message here is You can see Tesla's up 14.88% in the last 12 months. Ethereum down 27%. Google down 7.4%. Amazon down 33%. MicroStrategy down 56%. Bitcoin down 20%. Solana still up 33% in the last year. The message here is, again, you don't know when things are going to pop. We're in a world of hurt. This is a historic bad time from a macro perspective. That's reflected in stock price. But even so, still, certain things are above water. A lot of stuff is down. But let's talk about the conclusion. Now, this is the money piece here. Look to what will double. That's also very safe. Think Bitcoin. Think Tesla. Okay? And then put a small piece as you go out the risk curve into what will triple. And then if the further you go out the risk curve, look to what has a chance of returning to all-time highs. So you take something that was at 260, it's at 30 now. What are the odds it goes back to its all-time high? It might take 1 or 2 or 3 years. It might go to 0. We don't know. But that's how you allocate. High conviction in very safe names that are almost 99% sure thing. And then you look for the things that triple. A little more position. And then small amount of things that can do a lot better. That's the way I do it. That's the way I've done it. And that's kind of Dr. Sophie, what I advise. Do your math, build a spreadsheet, and just look at the simple framework. Tweak it any way you want, and that is kind of key. Next question is from Account Burner. Is there any chance that ETH will merge? The ETH merge will drop Ethereum back into the security bucket. Brilliant question. There's a lot of stuff going on right now about this POS merge. There's another acronym, I think, for POS, but I won't talk about that because we don't curse on this channel. So in our opinion, this is not a big concern. The SEC has already come out and said that Bitcoin and Ethereum are sufficiently decentralized. And after the merge, Ethereum isn't going to become less decentralized. In fact, it will become more decentralized with more participating in staking and node operations. It's very unlikely the SEC will go back on its position, go back on its words, and try to classify Ethereum as a security. And by the way the SEC clarifies something as a security is if its asset passes the Howey test. Some of you may have heard about this before. It has 4 legs. It's a 4-legged stool. 1, did it require an investment of money? 2, is it in a common enterprise? 3, is there expectation of a profit? And 4, to be derived from the efforts of others. So by applying the Howey test, the SEC found that Ethereum is decentralized to the extent that the third-party profits category does not apply, nor does Ethereum represent a common enterprise, making the network and Ether tokens free from security classifications. That's just the legalese. So do that as you will. I don't think there's any danger there. Next question is from Resistance. How can we ensure centralized exchanges are not selling Bitcoin they don't have? Oh, the good question. The series of questions are just brilliant this week. They're getting better every week and getting harder to address. So first of all, this is not something to worry about if you withdraw your Bitcoin off of the exchanges. Remember, not your keys, not your coins, all that stuff. But if you withdraw your Bitcoin off of Coinbase, then it wouldn't really matter to you if Coinbase's funds can't fully cover their Bitcoin, since all of your Bitcoins are held by you. Now, overall, though, this is not a major thing to worry about. In the old days, you really have to worry about centralized exchanges not having Bitcoin that people are trading or straight up stealing or losing their customers. Look at Mt. Gox, for example. But today's exchanges, they are much more regulated, much more transparent, much more secure. Coinbase, for example, is a publicly traded company. They have to file disclosures and comply with the SEC. Further, the blockchain is public. We can pretty easily tell which address belongs to the exchanges. And if they have fewer Bitcoin than they are claiming to have, that will be exposed instantaneously and people will go to jail. So, not a concern. Again, with a regulated exchange. Deregulated exchange offshore, different kettle of fish. Things like Coinbase, FTX, not a concern. Next question. Okay, so what? I noticed a discrepancy between Google with an L, GOOGL, and GOOG, the typical ticker that people trade. If there is a way to play this, for example, if you want to own Google anyway, why not trade them back and forth and make the spread? Great question. This is arbitrage. This is a big part of what we should all learn to do. So, well spotted. This is the chart of the GOOG Google arbitrage. You can see here way back when, I can't remember exactly when, but Google created a new class of publicly traded shares by issuing one share of its new Class C GOOG non-voting shares for each share of its existing Class A stock. GOOGL with an egg. That's the Class A one. Now, the key here is there is a very easy long short of pairs trading. You long the GOOG, you short the Google until the discrepancy narrows. And you can see that May, June, July 2021, where I put the gray arrow, was a great opportunity. But right now it's hovering around that 0.5% range. That's kind of like the blue line close to the zero line. It's a bit of a night chart. But unless you have a trigger finger, you're not going to be able to make money on that 0.5% ARB unless you got direct access to market makers, because their spreads will eat into that very quickly. But if it does hit that 2%, 3%, 4% like we had in July 2021, go for it. Definitely. Good question. Next question from JMP. Solana is a massive player in the NFT industry. As the NFT craze seems to wind down, will it take down Solana with it? Good question. So when we have things like what are happening right now, recessions, depressions, people lose money, of course, blockchains become less busy, less active users. But let's analyze exactly what the NFT action is up to on Solana. You can see here the action is mixed. So I have, this is from DeFi Llama, and these are the activity over the last 7 days. So some average prices are up, some traders are up, but overall volume is down about 10% on average. But remember, just looking at things in isolation, their top sites, I think Magic Eden is the lion's share of all the action right now. Number 2 is OpenSea, Solana Art, and Digitalized Market. But again, it doesn't make any sense to look at data in isolation. So let's switch and see how Ethereum is comparing. Here, you can see Ethereum, number 1 places, I think OpenSea, then LooksRare, CryptoPunks, Decentraland, etc. So average prices here are mostly down. Traders mostly down, except punks, and volume is down 30% on average. Compare that to the previous slide, 10% on average. You can see the Ethereum stuff is drying up fast, way worse than the Solana stuff. So again, my thesis is people want better, cheaper, faster. Yes, there was a 4-hour outage a month ago or so. I know. And they've had 3 outages. A lot of people say it's out all the time. 3 outages since January 2021. Congestion is not an outage, okay? So remember that, everybody. Not chilling, just stating facts. Now, when you look at Solana projects with the most daily active users, you can see NFTs are the second most active part of the Solana chain, but it's holding up for now. Down 10% in this market is not bad, but you can see most of the action is on Orca right now with about 361,000 daily active users. Magic Eden there is about 130,000. So even if the whole NFT space went away, which is highly unlikely, in fact, the Solana NFT marketplace grew out of nothing not a few months ago. Now they're basically eating all the Ethereum market share because the fees are less, and people that mint NFTs want to do it for free. That's why Solana's winning. Better, cheaper, faster. So that's the story. Yeah, even if NFTs went to zero, there's still a lot of value in the chain, so I wouldn't be too concerned. Now, last one is, we've done this before, but your money from YouTube Super Chats and stickers is donated to Sea Shepherd and their efforts to save the vaquita porpoises. This is the most endangered marine mammal located in Mexico. So we are trying to save... I'm going to drink some coffee. Oh, okay, so we're trying to save what we can. Thanks, guys. I'm going to jump into some questions and pull them up. First of all, MT, thank you. Future Millionaire, are these prices and any alts getting your attention? So that is a great question. Kill this. So right now I'm trying to save up cash, and I'm waiting for that full capitulation moment, and then I go all in. That's what I've kind of done a lot of my life. Wait for things to be real dark. This year was kind of a messy year. I kind of in December, moved to 30% cash. I jumped in hard on the 23rd or 24th of January, again on the 23rd of February. And since then, I kind of went all in, slightly premature, missed the bottom, but things have gotten a little bit worse since then. So we'll see. I'm going to wait. I'm going to wait and have a little bag of powder and detonate it at the same time when we see that bottom. But there are stuff like, buying, say, even Ethereum for me now is very attractive, and I haven't bought Ethereum since it was like $1,400 or so. And that was summer 2021, I think. Don't quote me on the numbers. I'm just going from memory here. So a lot of stuff is looking very attractive, but I still see, until we can get rid of these dark clouds on the horizon, and that means the Fed, when they stop hiking, when they signal what they're going to do, and they're very good at doing that. Jerome Powell is extremely good at doing that. He'll say what he's going to do before he does it. He wants to keep confidence in the markets. He doesn't want a debt spiral. He wants to keep unemployment up. He doesn't want companies laying off. He doesn't want a recession. All of that looks bad for him. And we are on the brink. We're probably in a recession already. So I think he will signal very clearly and save things. So trust no one. What do you think of Silvergate Bank for a play for stablecoin and Bitcoin institutional banking? Silvergate are the best, I'd say, crypto bank on earth, and a very interesting play. In full disclosure, I haven't analyzed them. I know they're getting started, so some of the ratios, the financial ratios, will not be pretty, but it is definitely an interesting play, for sure. And I love what they're doing. They're kind of like approaching it from a trad bank perspective, and at the same time solving real world problems with people like Michael Saylor from MicroStrategy, giving him that $250,000 loan, using his Bitcoin as collateral. So that was the first big play for that. But that opens the floodgates, like Bitcoin treasuries haven't been adopted as much as we would have liked because of that accounting rule where you've got to write down any dips in prices, but you can never write up any upside. Until that changes, I think that could hold stuff off, but that isn't stopping companies from putting Bitcoin in the balance sheet right now. Courage the Cowardly Dog. Do you have trust in Chinese brands, laptops, smartphones when accessing exchanges or hot wallets? Ooh, I haven't really thought about that, but I'd be very careful. There was a lawsuit where, and again, I'm just going from memory here. I think the US government tried to block Huawei on their 5G infrastructure and devices because they felt that the Chinese could spy on those devices. So look that up. I'd be very, very careful. I personally only use Mac machines and YubiKeys, VPNs, all the stuff. But yeah, I'd be careful, just in case. Always be paranoid. Alex, I should have sold Sol in early April 140, and now I'm down big. Solana's 80% of my portfolio, and would like to continue to HODL and DCA. In your opinion, are these good levels of DCA? Yeah, we're like, what was it, June 22nd? Solana was at $20. We're 10 days from that time a year ago, and it's still up since that time. And I did videos on it at that time and before. You have way too high a concentration. Again, if you look at me, I calculated my exact crypto holding today. I'm like 3.8% Solana because it's fallen down so much. And I can't remember, my Ethereum's like 13 or 14%. That's why I'm now 82, 83% Bitcoin. So you should be, for safety, everybody, you should be 80% Bitcoin. And you get, because there's so much risk, there's a high degree of confidence that Solana will fix the outage problem. If you read their recent release notes of what they have planned, it looks like they know how to do it. So they don't have any other problem but that. So, like, their tokenomics is amazing. The dispersion of ownership is amazing. There might be a regulated risk down the line if the SEC does come for them. But again, the SEC have 18,000 other coins to go after first. And hopefully they'll be sufficiently decentralized by that time. But yeah, you're way too heavy. But Alex, if you look like a genius if we go back to all-time highs, 260. what I like to do is, if I have high conviction in something, let me give you my Tesla case. I got into Tesla early, got into Bitcoin early, and you have your big bag. And when you see really, really, mean diversions from prices that are extreme bargain, I like to buy more. Like I will be buying more Tesla if it goes any lower next week, things like that. So it's a tough one, but I am very concerned with your 80% of your portfolio when I'm under 4%, and I am a Solana bull. So just think about risk, and this is the great market situation to see how things are actually performing. You got Bitcoin dominance now at 48%, getting close to that 50%. We'll see what happens, but I think the STETH issue with staked ETH is going to hurt ETH, which is going to drag down all the L1s. But if my good level of DCA anywhere near 22, I'm buying. Not financial advice. Marine0331 I, I'm 50% down on Bitcoin, Sol, and ETH. Ride this out or take the chance it will crash more and buy back. And yeah, that's Marine0331. Thank you for your service. That is a risky play. We are at historical lows by any metric. Yes, there's probably a little more downside. Could we go back to 25.4 in Bitcoin? Yeah, but we're very close to it right now, so that's the problem. Bitcoin is at 27.4, so we're $2,000 away from that. But what is the upside? A lot of people are talking about a $40,000 Bitcoin at the end of June. I don't believe that. I think there's too much uncertainty. What you can do, depending on your tax situation, is play it. Sell Bitcoin at 31, buy it back at 29, sell at 31, buy it back at 29. That has worked pretty well over the last couple of weeks. But jumping out now, when it's one of the best times ever kind of to DCA in, not financial advice, but I wouldn't condone it. Reed Richards, how does NEAR stack up against Solana in your compendium? It's not as good at all. In fact, I did see the video, somebody shared it with me, from Guy, and he did a NEAR Solana matchup. I didn't agree with some of his conclusions, because I look much more as to the elements of valuations that drive value. Guy did say the tokenomics were excellent on Solana. He didn't say that they were excellent on NEAR. Also, NEAR doesn't have anywhere near the 1,800 validators. I think NEAR has about 100. So that decentralization risk is there as well for NEAR. Tokenomics, not so good at all. So yeah, I think of the 300 tokens we analyzed, Solana is number 5 or number 6 out of 300. So it is way up there. So, and NEAR is not. But NEAR is doing some very good things, and it has a lot of promise. It just needs adoption. Until it has adoption, we have to wait and see. And that's why the market cap is so low. But it could have tremendous upside. I heard as well, NEAR, we're doing a partnership with Brave Browser, a couple of other things. Solana already did that, but they're chipping away and they're coming up there. But let me actually pull that score for you. So I do have it here. And bear with me. I dig this up. Yeah, I gotta pop this file. Oh, right. NEAR scores a 4. Solana scores an 8. So think NEAR is in the bottom 40th percentile, bottom 41st percentile, and Solana's in the top 79th percentile. So that's where we are. Cece ETH under $1,600. Are we in trouble? Yeah, ETH is suffering from a lot of concern about the proof of stake merge. Also, this staked ETH depegging. Let me check that depeg number. It's very, very important for us all to watch. Like a state. It's at 0.96. It did fall as far as 0.093, which is a little bit of a concern. But again, everybody's worried because everybody's so gun shy after what happened with Luna and that death spiral. Could the same thing happen with ETH and everything else? I don't think so, unless there's a huge amount of liquidation happening. If one of the trades that's super interesting, if we have traders out there, which I know we do, imagine the peg for staked ETH goes down to, say, 70 cents to the dollar for Ethereum value. That would be a sign to literally do the ARB. You could short ETH, go long staked ETH, and there you go. Because eventually it'll come back. It just has to wait for the proof of stake merge to happen, and that's kind of the math behind that. But anyway, it is super weak. But remember, ETH was $90 back in March 2020. I know it's a weird perspective. So that's still up 17, 18 times. Bombiggy, I'm sure everybody knows you can make good money in a down bear market. You don't have to see all the gains decrease. Education, love, and only invest in what you can lose. Love you all. Thank you for that great advice. But yeah, I mean, just again, like I did for Dr. Sophie early on, analyze. This is a time to structure how you position carefully. We did see that one example from Alex, I think, who's 80% Solana. That's dangerous. Again, I'm 80%, like my different categories, just to reiterate, over 80% of both Tesla and Bitcoin. Safest plays for me right now. So yeah, just do your own homework, build a spreadsheet, and build a plan and stick to it. Get into your high conviction names and have your speculative part of your portfolio, your high conviction safe part of your portfolio, and lock the safe part down for the next 5-8 years and just wait. I mean, we've got a 3-for-1 split coming up in Tesla. It could be a 500, 600 question. Yeah, so ETH under 1600. Yes, I did answer that question. Sorry for pinging me. Again, you can't look at ETH in isolation just to make sure somebody didn't get it. You got to look at the staked ETH peg. That's what's driving the rattles here. And if ETH falls, layer one's full. It's just the nature of the game. So with that, everybody, I want to thank you for the donation. Jeff Hammer, love you, man. St. Jude needs us. AC1 GT350, a bottle of red. Beatty McGee, green candle. And I don't know if there's anybody else, but these are tough times, but this will not last forever. This storm will pass. As I say, this too shall pass. But if you do have any cash, hold it. Wait for that final capitulation, and then we'll jump in. And a big thank you as well to Porphyrogenitus, Les, Robert Stefek, Mrs. Reed, MT, Reclused Man, Dr. Sophie, Teddy Yoon, P. Fadwan, Black Dog, Terrawan, Huckleberry Native. Thank you all. Be safe. Take care of each other, and I'll see you all tomorrow.